But let's talk a little bit more about those big banks, because we got four of the big reports today: Citi, JP Morgan, Bank of America, Wells Fargo among them. And I think the commentary from some of the CEOs is really what stuck out to me.
Yeah, it really has been an interesting day in terms of the commentary is also always the most interesting aspect of bank earnings. You get some numbers, but I think we're going to go ahead and dive into some perceptions of the market and the bank earnings as well. Now from Lee Munson, Portfolio Wealth Advisors President and CIO. Lee Munson, good to see you, sir. Happy Friday.
Oh, it's a happy Friday. After this, I'm going to be on the road heading to Taos to do some skiing.
Wow, that's a nice
Where are you going? Where are you skiing?
Taos Ski Valley, steepest and deepest in North America. So, Valhalla.
One of my favorite places to ski in this country, my friend. You can bring me with me. I know you're flying
Anytime.
private, so just throw me on the jet. All right, so let's talk about big picture bank earnings. We're going to break down some of the commentary from JP Morgan and Brian Moynihan and the likes in just a bit. But big picture, what's your number one takeaway when you put all the bank earnings today in perspective?
I'm old school. The only thing I care about bank earnings is that loan book expanding. I know we want to make it complicated about this. There's investment banking going to come back. Please. Bank of America, solid loan growth. Wells Fargo, the bad kid always get in trouble, had 4% increase in consumer lending, 18% on the commercial side. I mean, my God. Citigroup, the value trap of all big banks, more strong loan growth. And then from JP Morgan, we already know they have strong loan growth, but I love it. Jamie Dimon, quote, "I shouldn't have used the word hurricane." What else do you need? We're going to be fine. Okay? Your government has this under control and the bankers are lending. And here's the thing. If you start seeing that loan growth go negative, that's when you want to stop, maybe not get so antsy on adding lower as the market goes down. But we still have wings for this, at least for the next 6 months.
Well, Lee, it sounds like your takeaway then is that the next couple of months is going to be a lot more optimistic. We certainly will be seeing a lot more green than maybe we had initially anticipated. How much higher do you think then that we could be headed?
Okay, so now here's the thing. Now let's get into practical trading strategy, okay? So remember last year how a lot of smart people said, listen, when you have the first 9 months blown up, generally in the fourth quarter, you can get a 10, 12% rally, Santa Claus rally. And then we got that right before Thanksgiving, right? We're hitting 4,000 and hadn't seen it since. Okay, so Santa Claus came early. And what did people do? They sent the gifts back. I'm sorry, if I see Santa Claus and gives me a gift before Thanksgiving, I'm going to get it from him because he's a busy guy. Markets are doing the same thing. All your big CIOs are saying, oh, the first half is going to be so bad. And really what's going on, there's a well-known stat that everybody knows about that says the market doesn't have the bottom until you get into the recession, right? And we're not technically in a recession. I would say that's baloney. We are in rolling recessions, just like the early 1960s. It was called the Eisenhower rolling recessions. I don't need somebody to tell me we're in a recession. We're in it right now. So I think that we probably don't go lower than the October lows. I don't know. I'm guessing. I've only been doing this for 25 years. I think what's going to happen is people are going to be shocked. They're trying to front run the bad news of the second half. And just like how the Santa Claus rally came early, I think we could see another 10%. My God, we could see 43, 44, 4,500 before July 4th. And if you see it, pretend those are the end of the year numbers and trim down, right? You got to add load, you got to trim down. So I'm only looking to sell my overweight equities. Yes, I'm overweight. I took it down 5% back right before Thanksgiving. And if we see 43, 4,400, which you think is impossible, it could just take 2 weeks, just like that. VIX is getting crushed. I want to take more exposure off the table, right? Because nobody knows about earnings revisions in the second half of the year. We all know it's got to come down, right? But you got Cam Harvey, the father of using the inverted yield curve as a signal, saying we may not have a recession. And then you have other people who say the revisions of 4% growth in the second half have to come down. We don't know. So why not just be overweight, enjoy this rally, and then trim down if we get the opportunity. See if there's a blowout on the downside later this year. And then you have something to show for the bear market, right?
Man, Seana, I mean, we're done here.
You make it sound very easy.
We're done here.
You make it sound so easy.
So what do you say to those in that really large camp right now that say a 3,000, 3,200 S&P ahead?
You know what? I see this all the time. When you get down into the bottoms of bear markets, sort of like the end of bear markets, like the last quarter, last third, you'll get these bears that all got a big trophy last year for being right, at 12 o'clock high noon or 12 o'clock midnight. And like, oh, I'm a bear, I won. And then right at the end, just like in March of 2009, they give you these nuclear winter things. Like, oh, the S&P, I remember it was like somebody from JP Morgan say, oh, we can see the S&P go down to 400. And you want to avoid that. I say, if you want to bottom fish and you have this mind, because listen, I said the second half could be bad, right?
Yeah.
I'm looking more at the October lows, of last year, which to me, how is it different from the November lows? It's the same thing. It came back to the scene of the crime. So if we see 3,600-ish, all that money that I've been taking off the table, I am back in. I am locked and loaded. Let it go to 3,200, right? I don't need to try to catch that bottom on the tail end of a bear market, spouting from the mouths of people who were right last year. But Wall Street is littered with people who are right once in a row. And I just, over a couple of decades, I've learned, don't be so pessimistic. And I would rather, buy a little higher than the October lows if we get it. I think we probably will. And just call it a year because it's good value, be making money. You don't have to bottom ticket. And especially in a bear market like this, I think you have to be a little bit more realistic about what's happening.
We really got to get you to come out of your shell at some point, Lee.
I know. I hold back.
Man.
I hold back.
All right, you skiing bumps or you cruiser this weekend?
If you know me, you know there's only one thing I do. It's bumps in the steeps, in the deeps. I like the West Basin. Taos is a place where if you want to go and push yourself to the limit, right? Because I have to run moderate portfolios. I got to, most of my clients are like retired nuclear physicists. We just want to make a good return and not screw anything up. And Taos is my opportunity to do things that are wild, take risks. And my kids are on the big mountain ski team. So they're crazy. They're doing jumps off of bumps, off of cliffs. It's ridiculous. I'm getting old.
I want to go to Taos. I don't know if I want to go with you, though.
Oh, I do.
Don't go with me.
I don't know. I'm a little hesitant after all that.
We'll have a good time. Lee Munson, enjoy the bumps, my friend.
Thank you.